of the states in enhancing their capital investment towards creating productive assets and generating remunerative employment. The scheme for financial assistance to states for capital investment has been extremely well received by the states. In deference to the requests received during my meeting with the chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the budget estimates to 15,000 crores in the revised estimates for the current year. For 22-23, I'll repeat that sentence for the benefit of many of our honourable members. In deference to the requests received during my meeting with chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the BE to 15,000 crores, 15,000 crores in the RE of the current year. For 22-23, the allocation is 1 lakh crores to assist the states in catalyzing the overall investments in the economy. These 50-year interest-free loans
enhancing
are
financial
over
viability
and above the normal borrowings allowed to the states,
global
are
best
over and
practices,
above the normal
innovative
borrowings
ways of
to the
financing,
states.
and balanced risk allocation. Digital rupee.
This allocation will be used for PM Gati Shakti related and other productive capital investments of the states. It will also include components for
digital currency,
supplemental funding for priority segments of PM Gram Sadak Yojana, including
digital
support
currency
for the state share,
will also lead to a
digitization of the
and
economy,
currency
including digital payments and completion of OFC network
to introduce
and reforms related to building bylaws,
using
blockchain
town
and other
planning
technologies
schemes,
to be issued by the Reserve Bank of India starting 2022 and 23.
Financial
In 22-23, in accordance with the recommendations of the 15th Finance Commission, the states will be allowed a fiscal deficit of 4% of the GSDP. The central government is committed to bolstering the hands of the states in enhancing their capital investments have already been communicated, creating in 21-22 and generating remunerative employment. The scheme for financial assistance, a total expenditure of 34.83 lakh crores of rupees has been extremely well received by the states. The revised estimate is 37.70 received during my meeting with the chief ministers. The revised estimate of capital expenditure outlay for this scheme is being enhanced from 10,000 crores in the budget estimate. This includes an amount of 15,000 crores in the revised estimate for the current year towards settlement of outstanding guaranteed liabilities of Air India for 22-23 and other sundry commitments. Coming to the budget estimates, Honourable Speaker, sir, the total expenditure for the benefit of many of our honourable members is estimated at 39.45 the requests received during my meetings with chief ministers and state finance ministers are estimated the outlay for this scheme is being enhanced from 10,000 crores in the BE to 15,000 crores, 15,000 crores in the RE of the current year. For 22-23, the allocation is 1 lakh crores in the current year to assist the states is estimated at 6.9% of the GDP overall investments in the economy, 8% projected in the budget estimates. These 50-year interest-free loans are over and above the normal which is consistent with the broad path of the fiscal consolidation and above the normal borrowings to the state to reach a fiscal deficit level below 4.5% by 25.
This allocation will be used for
while setting the fiscal deficit
related and other productive capital investments of the states.
Of the need
It will also include components
through
supplemental funding for priority segments of PM
Gram Sadak Yojana,
now move to
including support for the state share, digitization of the economy, including digital payments and completion of OFC network, and reforms related to building bylaws, town planning schemes, transit-oriented development,
Honourable
and
Speaker,
transferable development.
I take this
rights.
opportunity to thank all the taxpayers of our country who have contributed immensely and strengthened the hands of the government
22-23, in accordance with the recommendations of the 15th Finance Commission,
of need.
the states will be allowed a fiscal deficit of 4% of the GSDP, of which 0.5% will be
spend
tied
more time
to
reading
power
because
sector
I would like the
reforms,
speech to get the
for which the
enough
conditions
time.
have already
However,
been communicated
is
in
the king must
21
make arrangements
22.
for Yoga Kshema,
Fiscal
which is the welfare
management
of the populace,
by way of abandoning
as against
any
a total
laxity
expenditure of
and by governing the state in line with the
rupees
projected
along
in the
with
BE
collecting
21-22,
which are in
the revised
consonance
estimate
with
is 37.70 lakh crores.
Shloka
The revised
11 from
estimate of
72.
capital expenditure is 6.3
Drawing
lakh
wisdom
crores
from our ancient
of
texts,
rupees.
we continue on the
This
path to
includes an
progress.
amount of
The proposals in this budget while
51,971
policy of
crores
stable and predictable
towards
tax
settlement of outstanding guaranteed
intend to bring more
liabilities
reforms
of
that
Air
will
India
take ahead
and
our
its
vision
other
to establish a
sundry
trustworthy
commitments.
tax regime. This will further simplify the tax system,
Coming to
promote
the budget
voluntary
estimates,
compliance by
Honourable
taxpayers,
Speaker, sir,
and reduce
the total
litigation.
expenditure in 22-23
Introducing
is estimated
new updated
at
return.
39.45
India is growing at an
lakh
accelerated
crores,
pace, and people
while
are
the total
undertaking multiple
receipts
financial transactions.
other than borrowings,
The Income
are
Tax Department has
estimated at
established a robust
22.84
framework
lakh
of
crores
reporting of
rupees.
taxpayers' transactions.
In this context, some taxpayers may realize that they have committed omissions or mistakes in correctly estimating their income for tax payment. To provide
The
an
revised
opportunity to
fiscal
correct
deficit,
such
Honourable
errors,
Speaker, in the
I am
current
proposing
year
a new provision permitting
is
taxpayers
estimated
to
at
file an
6.9%
of the
on
GDP
payment of additional
as
tax.
against
This
6.8%
updated projected
can
in the
be
budget
filed
estimates.
within 2 years.
The fiscal
from the
deficit
end
is
of the
in
relevant
22-23
is
year.
estimated at 6.4% of the GDP, which is consistent with the broad path
Honourable
of the fiscal
Speaker, sir,
consolidation
presently,
announced by me
if the
last
department
year,
finds
to reach a
out that
fiscal
some
deficit
income
level
has been
below
missed out by an
4.5% by
it goes through a lengthy
25-26.
process of
While setting the
adjudication.
fiscal deficit
Instead,
level in 22-23,
with this proposal now,
there will be a
conscious
trust
of
reposed
the need
in the
to
taxpayers
nurture
that
growth
will enable the
through
assessee
public
herself
investment
to declare
to
the
become
income
stronger
that she may
and
have missed
sustainable.
out. I will now move to part B
Earlier,
of my speech.
while filing her return, full details of the proposal are given in the finance bill. It is an affirmative step in the direction of voluntary compliance. Direct tax. Honourable Speaker, sir, I take this opportunity to thank all the taxpayers of our country who have contributed immensely and strengthened the hands of the government. Currently, cooperative societies are required to pay alternate minimum tax at the rate of 18 and 1.5%. The Mahabharata. However, companies spend the more time reading because I would like the speech to same, which is the alternate minimum tax. However, the substance of it is the king must make arrangements to provide a level playing field between cooperative societies and companies. By way of abandoning, I propose to reduce this rate and for the cooperative societies also to 15% with collecting taxes, which are in consonance with. Honourable Speaker, sir, I also propose to reduce the surcharge on cooperative societies from the present 12% to 7% from our ancient texts, having we continue on the income of more than 1 crore in this budget while continuing with our declared policy. This would help in enhancing income of cooperative societies, intend to bring more reforms that will mostly take from the rural and from to establish a trustworthy tax regime. This will further simplify the tax system, promote voluntary compliance by taxpayers,
and
the parent or
litigation.
guardian of a differently abled
Introducing
person
new
can take an
updated
insurance
return.
scheme for such person.
India is growing at
The
an
present
accelerated
law
pace,
provides
and people
for
are undertaking
deduction to the
multiple
parent
financial
or guardian
transactions.
only
The
if
income
the lump
tax
sum
department has
payment
established a
or
robust
annuity
framework
is
of
available
reporting
to the
of taxpayers'
differently
transactions.
abled person
In this
on the
context,
death of the
some
subscriber
taxpayers
that
may
is the
realize
parent or the
that they
guardian.
have committed
There
omissions
could be
or mistakes
situations
in
where the
correctly
differently
estimating their
abled
income
dependent
for tax
may
payment.
need payment
To
of
provide an
annuity or
opportunity
lump
to
sum
correct
amount
such errors,
even during the
I'm proposing
lifetime
a new
of their
provision
parent or
permitting
guardian.
taxpayers
I
to file
propose
an updated
thus
return
to allow
on payment
the
of
annuity
additional
or
tax.
and
This
lump sum
updated
amount
return
to
can
the
be
differently
filed
able
within
dependent
2 years
during
from
the
the end of the
lifetime of the
relevant
parent and
assessment
guardians,
year.
that is parent or guardians, attaining the age of 60 years. Honourable Speaker, sir, presently, if the department finds
Parity
out that
between
some income has
employees
been
of the
missed out
state
by an assessee,
and central governments,
it goes through a lengthy
At
process
present,
of
the
adjudication.
central government contributes
Instead,
14%
with
of
this
the
proposal
salary
now,
of
there will
its
be a
employees
trust repost
to the national
in the taxpayers
pension
that will
system,
enable the
NPS,
assessee
Tier
herself
1.
to declare
This
the
is
income
allowed
that
as a
she may have
deduction
missed
in
out
computing the income of the employee.
earlier. While
However,
filing her
such
return,
deduction is allowed
while
only
filing her
to the
return,
extent of 10%
full details of the proposal are given in the finance
case
bill.
of employees of the
It is
state
an affirmative step
to
in the
provide
direction of
equal
voluntary
treatment
compliance
to both central and state government employees. I propose to increase the tax deduction limit
reduced alternative
from
minimum
10%
tax
to 14%
rate
and
on
surcharge
employers'
for
contribution
cooperatives.
to the MPS account
Currently,
of
cooperative
state government
societies
employees
are required
as
to
well.
pay alternative
This would help
alternate
in
minimum
enhancing
tax
the social
at the rate
security
of
benefits
18 and
of the
1.5%.
state government employees
However,
and bring
companies
them
pay
at par the
with
same
central
rate,
government employees.
the same, which is the alternate minimum
Incentives
tax
for
at
startups.
the rate of 15%.
Startups
To
have
provide a
emerged
level
as
playing
drivers
field
of
between
growth for our
cooperative
economy.
societies and companies,
Over the past
I
few
propose
years,
to reduce
the country has
this
seen a
rate for the
manifold
cooperative
increase in
societies
successful
also
startups.
to 15%. Eligible startups established before 31/3/2022
Honourable Speaker, sir, I also
had been
propose to
provided
reduce
the
the tax
surcharge on
incentive
cooperative
for 3
societies
consecutive
from the present
years
12%
out of the 10
to
years
7%
from
for those
incorporation.
having total
In view
income
of
of
the
more than
COVID pandemic,
1 crore
I
and up
propose
to
to extend
10
the
crores.
period of incorporation
This would help in
of the
enhancing
eligible
income of
startup
cooperative
by 1 more
societies
year
and
that
its
is
members
up to
who are mostly
31
from the rural and from
2023
farming
for
communities
providing such tax incentives.
Tax relief to persons with disability. The parent or
Incentives
guardian
for
of a differently
newly
incorporated
person
manufacturing
can
entities
take an insurance
under
scheme for such
concessional
person.
tax regime.
The present law,
in an effort to
provides
establish
for deduction
a
to the
global
parent or
competitive
guardian
business environment
only if the lump
for
sum
certain
payment
domestic
or
companies,
annuity
a
is
concessional
available
tax
to the
regime of
differently
15% was
person
introduced
on the
by
death
our
of the
government
subscriber
for
that is
newly
the parent or the
incorporated
guardian.
domestic
There
manufacturing
could
companies.
be situations
I propose to
where the
extend the
differently
last
abled
date for commencement
dependent
of manufacturing
may need payment
or
of
production
annuity or
under
lump sum amount
Section
even during the
115
lifetime of
AB
their parent
by
or guardian.
1 more year.
I propose
That is from 31st
thus to
March
allow
2023
the payment of annuity
to
or
31st
and lump
March
sum amount
2024
to the differently abled dependent during the lifetime scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. Litigation management to avoid repetitive appeals by the department. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in the appeal before a jurisdictional High Court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such a question of law is decided by the jurisdictional High Court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayer and the department. Taking forward our efforts to further promote the IFSC, I hereby propose to provide that income of a non-resident from offshore derivative instruments or over-the-counter derivatives issued by an offshore banking unit, income from royalty and interest on account of lease of ship, and income received from portfolio management services in IFSC shall be exempt from tax, subject to specified conditions. Rationalization of surcharge. In the globalized business world, there are several work contracts whose terms and conditions mandatorily require formation of a consortium. The members in the consortium are generally companies. In such cases, the income of these AOPs has to suffer a graded surcharge up to 37%, which is a lot more than surcharge on the individual companies. Accordingly, I propose to cap the surcharge of these AOPs at 15%, 15%. Further, the long-term capital gains on listed equity shares, units, etc., are liable to maximum surcharge of 15%, while other long-term capital gains are subjected to a graded surcharge which goes up to 37%. I propose to cap the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to startup community, and along with my proposal on the extended tax benefits to manufacturing companies and startups, reaffirms our commitment to Atmanirbhar Bharat. Clarification in relation to health and education cess as business expenditure. The income tax is not an allowable expenditure for computation of business income. This includes tax as well as surcharges. The health and education cess is imposed as an additional surcharge on the taxpayer for funding specific government welfare programs. However, some courts have allowed health and education cess as business expenditure, which is against the legislative intent. To reiterate the legislative intent, I propose to clarify that any surcharge or cess on income and profits is not allowable as business expenditure. Deterrence against tax evasion. Honourable Speaker, sir, presently there is ambiguity regarding set-off of brought forward loss against undisclosed income detected in search operations. It has been observed that in many cases where undisclosed income or suppression of sales, etc., is detected, payment of tax is avoided by setting off of losses. In order to bring certainty and to increase deterrence among tax evaders, I propose to provide that no set-off of any loss shall be allowed against undisclosed income detected during search and survey operations. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I propose to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 rupees during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So, remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something which I've got to know this morning, not part of my speech, but worth putting in here for the knowledge of the Honourable House. I would like to bring to the notice of this House that the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic recovery, post-COVID, recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In Part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the Customs National Portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods. National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades in some cases, have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honourable Speaker, Sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. In the last 2 budgets, we have rationalized several customs exemptions. We have once again carried out an extensive consultation, including by crowdsourcing. As a result of these consultations, more than 350 exemption entries are proposed to be gradually phased out. These include exemptions on certain agricultural produce, chemicals, fabrics, medical devices and drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself instead of prescribing them through various notifications. This comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving our objective of Make in India and Atmanirbhar Bharat. I shall now take up specific sector-specific proposals. Electronics. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other such items. This will enable domestic manufacturing of high-growth electronic items. Gems and jewellery. To give a boost to the gems and jewellery sector, customs duty on cut and polished diamonds and gemstones is being reduced to 5%. Simply sawn diamond would attract nil customs duty. To facilitate export of jewellery through e-commerce, a simplified regulatory framework shall be implemented by June this year. To disincentivize import of undervalued imitation jewellery, the customs duty on imitation jewellery is being prescribed in a manner that a duty of at least 400 rupees per kg is paid on its import. Chemicals. Customs duty on certain critical chemicals, namely methanol, acetic acid, and heavy feedstocks for petroleum refining, are being reduced, while duty is being raised on sodium cyanide, for which adequate capacity in the domestic arena exists. These changes will help in enhancing domestic value addition. MSMEs. Duty on umbrellas is being raised to 20%. Exemption to parts of umbrellas is being withdrawn. Exemption is also being rationalized on implements and tools for agricultural sector which are manufactured in India. Customs duty exemption given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. To incentivize exports, exemptions are being provided on items such as embellishment, trimmings, fasteners, buttons, zipper, lining material, specified leather, furniture fittings, and packaging boxes that may be needed by bona fide exporters of handicrafts, textiles, leather garments, leather footwear, and other goods. Honourable Speaker, sir, duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Tariff measure to encourage blending of fuel. Blending of fuel is a priority for this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of ₹2 per litre from first day of October 22. A few other changes are being made in duty rates, customs, tariff and customs law, the details of which are there in the finance bill. Mr. Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management FRBM Act 2003, Medium-Term Fiscal Policy cum Fiscal Policy Strategy Statement and Macroeconomic Framework Statement.
Item number 3, Vitt Videk 2020, Nirmala Sitharaman ji.
Sir, item number 3, Finance Bill. Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2022.
प्रश्न ये कि वित्त विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में। माननीय मंत्री जी, वित्त विधेयक को पुनर्स्थापित करें।
Sir, I introduce the bill.
सभा की कार्रवाई कल बुधवार दिनांक 2 फरवरी 2022 को 4:30 बजे तक के लिए स्थगित की जाती है।